Firstly, take us through the numbers. What
Pleasure.
are we talking about here in terms of funding from the IMF and the World Bank, etc.?
Well, it's actually surprisingly difficult to get a handle on exactly what the numbers are because you're accumulating figures from a lot of different sources. But we've done some calculations that suggest that certainly it's not only rhetoric. We're actually seeing very material increases in lending from the big lending agencies. To give you an idea, according to our calculations, the World Bank current lending book to Africa is about $9 billion and climbing. The IMF north of $4 billion, and the African Development Bank up at about $5 billion. And that's already roughly double the kinds of numbers that we were seeing this time last year.
But how substantial is it compared to past funding that Africa has received?
Yeah, I think that's the right question to ask. I mean, it's one thing to see that the numbers are coming up quite steadily, but to contextualize that against the scale of the new funding need that many African countries have is a different matter altogether. And the problem is one needs to be careful in doing these forecasts because there are a lot of assumptions and projections that are involved. Maybe one useful way to look at it is to think about what the amounts of financing is going to be that Africa needs to finance its net imports, domestic investments, and government spending. So its external financing requirement that we see through the current accounts in the balance of payments. And a rough estimate of that for 2009 is a need of $60 to $70 billion, which is a huge deterioration compared to last year, where sub-Saharan Africa as a whole actually ran a modest surplus in the current accounts. So we're talking about several tens of billions of dollars in external financing requirements that come from this external weakness that Africa faces. But we're also talking about, in those terms, a very substantial increase in the amount of support from institutions like the World Bank too, that's well into the teens of billions of dollars and likely to continue climbing.
But do you think these institutions will be able to meet the targets that they've set in terms of funding for Africa? Yeah,
I mean, we think their contribution is definitely material, as I say. On their own, these amounts aren't going to be enough to plug the kinds of gaps that we're seeing in some of the more vulnerable economies across Africa. But from an investment perspective, the role they're playing continues to be important because they're helping to plug that gap. So they're helping to ensure that there's much more stability in government expenditure, for example, than would otherwise be the case. They're boosting foreign exchange reserves. That's going to alleviate some of the pressure that we would otherwise see on some of the African currencies. And that's reassuring for foreign investors who might be eyeing a return to some of these economies or who might have existing business interests there. So on their own, they're not necessarily going to be enough, and we're going to see, and we are seeing some reductions in government spending, some pressure on currencies and various adjustment processes. But we see them as a backstop, and recent research that we've done has really tried to quantify how much of a backstop that would be. And the answer is significant.
And take us through some of the risk factors that are involved.
Yeah, well, I think the main question people would have about this is that you think a little bit about the bad old days of unsustainable debt positions and debt distress. There was a time when many countries just took on too much debt, and even if it was debt at quite concessional terms, debt is debt. It sits there and it has to be paid back, and it takes away from other ways to spend money on social services, on development spending, on infrastructure. So the big risk perhaps is this going to return us to that kind of situation? And we think the news there is reassuring. Many African countries, and in all of this there's a bit of a risk in speaking in such general terms, so we should bear that in mind. But many African countries have made tremendous progress in reducing the amount of debts that they have. There was assistance from these institutions in doing this with the HIPC initiative and the Multilateral Debt Relief Initiative and so on. So they essentially have space to take on a bit of debt. And given that this is a temporary crisis, hopefully, that we're seeing, there's a very strong case to be made for lending at very concessional rates on a temporary basis to help smooth the way. And actually, in the long term, that can be cheaper than the alternative, which is to really experience potentially quite savage cuts in government spending, experience a disruptive crisis, and that can have very long-lasting effects on countries' economic progress. So, you know, the debt issue is definitely something to watch. This isn't free money. It's on very concessional terms. The loans tend to be cheap loans, but it is debt. It's certainly something to keep an eye on.
Yeah, but how exactly do you think Africa will be able to pay this back?
Well, that's a question of the kinds of progress that these economies are going to make in years to come. I mean, when we talk about the loans being on quite good terms, it's important to emphasize that really is the case. The IMF, for example, has instituted interest payments relief for lower income countries through 2011. Typical World Bank and African Development Bank loans have repayment grace periods of 5-10 years, and then you repay the loan over a 20, 30, 40-year period. So this isn't a wall of repayments that's going to hit countries straight away. And as I say, you know, really the hope is that this money is going to be used wisely to ensure that there's stability in government expenditure, and that should be contributing to the structural progress that's being made to safeguard important investments, whether it's social investments or in infrastructure and the like. And then that should minimize the overall GDP impact of this crisis, and countries should be able to return to a growth path more quickly than they otherwise would be, and that makes repaying these loans fairly rapidly potentially feasible.
Alex, just before we go, how exactly is this money going to be channeled into African economies?
Well, again, there's a bit of a danger in generalizing here because we're talking about a wide variety of funding instruments. You know, IMF funding tends to be balance of payments supports, so that will go into currency reserves, essentially. That's very important from an investment perspective because that ensures that countries are able to meet their external obligations more easily. World Bank and African Development Bank funding is often direct budget supports, so it can just go straight into the government budget for spending, or it'll be targeted towards specific projects over a period of time. So there are a variety of mechanisms. Perhaps the last one quickly to mention, which is quite important, is an upcoming general allocation of what are called IMF special drawing rights. That should happen at the end of this month, and we work out that that's going to be worth about $11 billion for Africa, and that's a substantial boost in that case to currency reserves.